All right, y'all. I want to talk about how we can predict large moves like this massive pump before they happen, because there absolutely is a way to tell that price is about to have a very erratic move, whether it be up or down. And you're not going to catch every single pump, but I'm pretty confident that what I'm about to show you in this video will at least show you what to look for if there's about to be a pump. And I would say about 90% of the time, if you see these things on the chart, you will get a very significant move, at least enough to make some good profit. Now, this is an Ethereum trade that I'm currently in. This trade is currently up over 37%. My entry was around 31.34, and we're currently up around 32.50. 31.34 was actually right down here, so actually my entry is a little bit lower than what this actually shows here. I entered right down here. And so as you can see, I pretty much longed, not the real bottom. I was, let's see, from the bottom, I was, okay, $8, $8, 0.24% away from the actual bottom where I got into the long. So what I want to do today is I just kind of want to walk you through what exactly I was looking for when I entered this trade, why I entered this trade, and how you can find similar trade setups. Now, you're going to need a few things. Number one, you're going to need the indicator called Market Cipher. Market Cipher is an excellent set of indicators all wrapped into one. And basically, this is one of the most powerful tools out there when it comes to trading on TradingView, because it can really show you things that you cannot see with any other indicator. It can show you money coming in and leaving the asset. It gives you very clear indications on which direction the price is going. And if you see a combination of things, it can really give you a clear indication that something big is about to happen. So what I want to do is I want to reverse engineer this Ethereum trade right here and kind of show you why I entered the trade. Let's start by going to the 1 hour time frame. The 1 hour time frame on Market Cipher, we can see something very, very significant here, which is this. If we take a look at Market Cipher B down here, okay, we can see that we are actually printing a hidden bullish divergence, a hidden bullish divergence. Let me draw it out for you, and then I'll explain a little bit what exactly that is. A hidden bullish divergence is where Market Cipher is printing a lower momentum wave. Okay, if you're unfamiliar with Market Cipher, I recommend you check it out. There's actually a $500 discount in the description of this video for the lifetime subscription. It's only available for the first 50 people who use it, but still, it's a really good deal. But a hidden bullish divergence is if you see price put in a low and then do some stuff and then later put in a higher low. So you can see a very clear trend line of the price moving up, bouncing off this trend line. Yet on the oscillator, Market Cipher B, you see the exact opposite, where momentum puts in a low and then it puts in a lower low while price puts in a higher low. If you see this happening, where momentum is putting in a lower low while price is putting in a higher low, this is a continuation pattern. This is telling you that we're in an uptrend and we're about to get another move upwards in the uptrend. The opposite is true in a downtrend, right? If you see that price is getting lower and yet momentum is getting higher, that's telling us that we are about to come down more. Of course, we've been kind of in an uptrend for a while here, so I don't have time to show you a hidden bearish divergence. But the first thing we're going to look for, if we want to find one of these pumps that seem to come out of nowhere, is we want to find a hidden divergence, okay? A hidden bullish divergence. And again, we want to see price printing a higher low while momentum is printing a lower low. Then what we want to do is we want to zoom into a lower time frame and find a regular bullish divergence, okay? So what I like to do is, my favorite two time frames to do this on is the 1 hour and the 6 minute time frame. The 1 hour and the 6 minute time frame. So first I'm on the 1 hour. I'm looking to see the hidden divergence. If I see that, then I will go down to the 6 minute. And on the 6 minute, what I want to see here is a regular bullish divergence. A regular bullish divergence is where price is making a lower low while momentum is making a higher low, okay? So if you see a hidden bullish divergence mixed with a regular bullish divergence, I would say most of the time we are going to get some kind of very significant move to the upside. Now, are you going to catch every pump? No. For example, on Bitcoin, we got a very similar pump. We absolutely did have a hidden bullish divergence. It was extremely clear that we had the hidden bullish divergence. We could see right here that as price was printing a higher high, momentum was printing a lower low. Okay, price was printing a higher low, momentum was printing a lower low, a massive hidden bullish divergence. But if we go down to the lower time frames, we can see that we never actually put in a regular bullish divergence. In fact, all we did was print a double bottom with the anchor wave, and then we got the trigger waves. Now, usually, a lot of times, this will lead to a pump as well, but I have found that the combination of a hidden and a regular bullish divergence leads to a massive pump. And there's a few other things that we can do to ensure that the pump is going to be legitimate, because you could see that for example, if we go back to the 1 hour time frame, you might say to yourself, well, wait a second, Jason, wait just 1 second. All right, I see also here that we were printing a hidden bullish divergence here, yet what happened? We ended up dumping. So how can you say that we're just looking for the hidden divergence and we're going to pump? Well, let's take this as an example and say, okay, yeah, there is a hidden bullish divergence right here. Okay, this is pretty much undeniable, right? There's a hidden bullish divergence, but we end up dumping from here. Why is that? Well, if we zoom into a lower time frame, what do we see as we're coming up to this area? We're actually not seeing any kind of regular bullish divergence, which is what would have kept me out of that trade, which is why I actually did not take this Bitcoin trade, unfortunately. Okay, because I was waiting for a regular bullish divergence to print. So again, you're not going to catch every single pump, but if you wait for those elements, it will definitely keep you out of trades that could, for lack of a better term, get you wrecked, right? Because look at this pump that happened here with Ethereum. It was pretty much a massive pump because we got all those confirmations. Now, there's a few other things that we can also do to get in a really good trade, and one of those things is if the hidden divergence and the regular divergence line up with good levels of support and resistance, then you can almost be certain that the trade will go very well. Now, you're not going to find these setups every day, guys. In fact, I probably get 1, maybe 2 of these a week. Last week, actually, if we come here into my Discord here, into the channel where I post my trade setups and stuff like that, right? Last week, I'm pretty sure it was last Thursday, or maybe 2 Thursdays ago. Let's see here. Where did I post that trade setup? I post a lot of trade setups in here, guys. Where was that? I guess it was kind of a little while ago. It was kind of far. Maybe it was 2 weeks ago now. It might have been 2 weeks ago now. Well, bear with me, y'all. Bear with me. This is it. No, this is not it. Okay, so forget about that. Forget about that. Forget about that. But yeah, by the way, if anyone's interested in joining this Discord, where I do post trade setups like these right here, these trade setups in here, you can do that by becoming a patron at patreon.com/Jason Casper. And I guess I can't find that trade setup now. I'm sorry, guys. I post way too much in there. But I try and provide a lot of value for people by posting every day, giving you analysis on the markets, giving you levels to trade off of. But if you combine the hidden divergence and a regular divergence with good levels of support and resistance, then you can have yourself a surefire trade. And one of my favorite things to do is use the Fibonacci retracement tool. And the way you're going to do this is you're going to pull the fib from the swing low to the swing high. Okay, and what you're going to do is, if you see that we're coming down specifically to the golden pocket, okay, the golden pocket Fibonacci level comes in between 0.618 and 0.65 right here. if you see the hidden divergence and the regular divergence lining up in this golden pocket, I would say I would always take that trade. There would never be a day where I would not take that trade, because that is the kind of trade where you are pretty much, I wouldn't say you're guaranteed, because nothing is guaranteed, but if you see, I mean really, if you see a hidden bullish divergence like this, you're zooming into a lower time frame like the 6 minute, and you see a regular bullish divergence, and on top of that we're coming into the Fibonacci golden pocket, these are the types of trades where if you just wait for these and don't take any other trade, you will have immense success, because although you're not going to be trading every day, you're not going to be scalping those tiny time frames, you're not going to be stressed out over the charts 24/7. All you have to really do is find these levels and then kind of watch the price as it's forming, check the charts every now and again. If you see the hidden divergence forming, then go down to the lower time frame and see if there's a regular divergence forming. If you see that, then go ahead, pull out the fib. And if it's coming down to a significant level, guys, that is a good trade setup. And it doesn't just have to be a Fibonacci golden pocket. It could be any fib level. It could be any kind of daily level of support or resistance, weekly level. You could use any kind of level of support and resistance. And by the way, if you want to know more about how I trade and you want to learn how I trade, check out jasoncaspertrading.com, because this course is a comprehensive course geared for people who are maybe newer to trading or struggling to becoming profitable. And this will walk you through step by step everything you need to really start to feel confident in your trades, to master market cipher and learn how to predict which way the price is going to go. Obviously, this is not financial advice, but you can check out these success stories here. This course has really changed the way people approach the markets, because it gives you a systematic, methodical approach to trading. And assuming you've never even looked at a chart before, we go through everything you need to know about technical analysis, market cipher in extreme detail. Extreme detail. I think there's 10 sessions on how to use market cipher, and then we go through different trading strategies that I use personally, but also teaching you how to create and test your own strategy that has a high win rate, how to use risk management, so that even if you're not the best trader in the world, right? Even if you're losing the majority of your trades, you can still be profitable over time if you are implementing a good risk management strategy. So this will put you off on the right foot, will give you an edge over, I would say, 90% of new traders coming into these markets, and even traders who've been doing it for a while struggling to become profitable, because it breaks it down step by step and shows you kind of what to do. Okay, so that is kind of how I'm getting into these trades. And if we go back to the 1 hour time frame and we take a look at maybe some other trades that we could have had here during the past few weeks or so, we can actually see right back here, this is the trade setup I was trying to show you, that we were actually getting a hidden bullish divergence right here. You can see it on Market Cipher B, where momentum was coming down, printing a lower low while price was printing a higher low. Okay, I'm going to go ahead and put a vertical line here so that we remember where this is. And then we go down to the 6 minute time frame. We'll go back in time, going back in time. And check this out, guys. Check this out right here. Also, we can see that as we are printing the regular bullish, the hidden bullish divergence, we are also printing a regular bullish divergence, right? As we're printing a hidden bullish divergence, we're printing a regular bullish divergence where the momentum is coming up. Not only is the momentum coming up, but we can see the money flow is indeed coming up if we draw a trend line across these money flow waves. Not only that, but we can even see the VWAP coming up, printing higher lows. Okay, as price is making lower lows, the momentum waves, the VWAP, and the money flow is making higher lows. And not only that, but if we come back to the 1 hour time frame and we zoom out again and we just assess the situation right here, we can see that if indeed we pull the fib from the swing low to the swing high, was it this swing low I was pulling it from? In fact, this actually might have been a scenario where it was a different fib level. I think it was the 0.5 fib. Yep, it was the 0.5 fib level. See, it doesn't have to be the 618. It could be a different fib level, but you can see that as we are coming down to, actually it was the 382 fib level right there. I remember it might have been a combination of different fib levels here. I'm not really sure. Yeah, you could see that from one fib pull, it was the 0.5 and the 382 fib. There was actually two fib levels that we were coming down to right here as we're getting those confirmations. Okay, and so if we entered right here, you know, it was a really nice trade. It was a really nice trade. This is one of the setups that I posted in the Discord, and we actually were able to take one on Bitcoin there too, because if we go to Bitcoin and we check out what was happening at the time, let's go to the 1 hour time frame. Let's go back to that specific situation. This was it right here, a really juicy trade where, you know, as momentum, price is making a higher low, as momentum is making a lower low. And really, especially if you see one of these big old BitBoy green dots down here, right? Shout out to Ben Armstrong for popularizing these big old dots here. If you see one of these in the hidden bullish divergence, right? It's even more powerful. It's even more powerful. Okay, so we had the hidden divergence coming right down to the golden pocket. Okay, we can see we're coming right down into that golden pocket as we are getting the, hang on 1 second here, as we are getting the hidden divergence. We're coming right into the golden pocket Fibonacci level as we're getting the hidden divergence. And if we go down to the 6-minute time frame, what do we see as we're coming down to that area? Hang on, that was recently. Let's go back to that specific setup right here. Again, we see a regular bullish divergence. Price is making lower lows as momentum is making higher lows. Boom. That would have been our entry, right? The perfect entry right here, the perfect entry. We entered the trade, we put the stop loss below last swing low. Even though we have a little retracement, you know, we just come up and off to the races we go. And so that is how you are going to find those really awesome setups. Now, again, there's different layers to it, right? You don't have to use levels of support and resistance. I find that it's very helpful to use support and resistance because it helps you know that there's going to be more of a reaction there. But let's check out this thing that happened with XRP recently. Ripple actually had just a regular bullish divergence on the 1 hour time frame here. We can see, which actually did lead to a massive pump. So if you're ever looking at the 1 hour time frame and you see a regular bullish divergence on the 1 hour, that's super powerful, super powerful. It's even more powerful if we're coming down to a level of support or resistance. And, you know, for me, I usually wait for all three of those things where we're at a level and I see the divergences. But that's pretty much what I wanted to show you today is, you know, to predict those nice pumps, you're going to wait for a hidden divergence on the 1 hour, a regular divergence on the 6 minute, and preferably coming down to a very important level of support or resistance. It doesn't have to be a fib level. It could be any level of support or resistance you have on your chart. All right, y'all, God bless, and I will see y'all in the next video.